At Eventide, we have the conviction that investing has an important purpose. As investors, we can allocate capital towards the companies that we believe will be successful as a result of creating true value for society.
We designed the Eventide Dividend Opportunities Fund to focus on investing in equities with dividends that are sustainable and growing. Companies with this characteristic tend to be a great risk complement to a high-growth equity strategy, offering potentially lower volatility and steadier equity returns.
We are fundamental, bottom-up asset managers, which means our approach centers around our conviction in individual companies and their ability to be successful by creating value, and there are both external forces that can provide headwinds or tailwinds for the company, as well as internal characteristics that show us if this company is competent enough to succeed.
One of the most powerful external forces that we consider are what we call themes. Themes are these persistent trends that emerge in our economy and in markets that transcend the shorter business cycles, meaning they are secular rather than cyclical.
Some of these long-term secular themes are trends like business intelligence and the Internet of Things, 5G and data infrastructure, beyond Moore's Law, the technologies enabling devices to become smaller and more powerful simultaneously, Industry 4.0, the fourth industrial revolution that will impact every sector of the markets, energy efficiency, supply chain resiliency, health food and sustainable agriculture, clean water technology, clean energy, cybersecurity, which has become increasingly important since most businesses will continue to offer remote work.
Home ownership and home improvement have ripple effects that impact many aspects of community development and individual well-being.
After we identify these themes, we consider deeply whether or not we believe these themes will help promote human flourishing.
Ultimately, we're seeking companies that are positioned within these strong secular themes that we believe are good for society. Our process for vetting out individual companies is twofold.
First, we perform a qualitative analysis of a company, where we evaluate a company's intangible qualities and make a determination as to whether we believe the company is high quality. And we look for these 4 key traits: sustainable competitive advantages, attractive industries, great management teams, and whether the company is creating compelling value.
And this is where we use our Business 360 framework to organize our research and evaluate if a company is adding value or extracting value from its various stakeholders. Its customers, employees, suppliers, its host community, the environment, and society more broadly. The second part of our company evaluation is our financial analysis that determines a company's long-term financial strength and their ability to generate a persistent dividend, where we look for attractive income generation, revenue and earnings growth that is consistent and repeatable, a stable business model, operating margins that are stable or increasing, a strong balance sheet, and positive free cash flow.
We then take the results of our qualitative and financial analysis and come up with what we believe to be a company's intrinsic value. And we do this by using a process called discounted cash flow, which considers the magnitude, timing, and risk of future free cash flows. And we discount those future estimates back to what we believe a company's stock should be worth today. And if a company's stock price is below our intrinsic value, we'll consider it for our portfolio. The final part of our process is how we actually construct our portfolio for ongoing risk management.
When we're building a strategy that has over 60 or 70 companies, it is important to not only consider the risks of each individual company, but how each of their risks complement each other. As we position our portfolio and consider how much weight to give each holding and sector, we take into account our macro views of the economy. We use a fixed dashboard where we organize data streams into 3 categories, or what we call the 3 legs of the stool. Sentiment, what institutional and retail investors are thinking.
Interestingly, smart investors tend to be contrarians. They'll be bullish when others are bearish, and bearish when others are bullish.
Leading economic indicators,
which are the fundamental categories that give insight into the underlying health of the economy.
And valuation,
which tells us overall if the market is overpriced or underpriced, given a number of different measurements.
Since we're long-term focused, we tend to avoid huge tactical shifts. We will make slight adjustments to dial up or dial down our exposure in different risk areas to reflect our long-term projections.
When we see companies in our portfolio succeed by creating value for others, it validates our thesis that business serves a high purpose.
What motivates us is thinking about all the people that we're impacting with our investment dollars and the shareholders that can benefit as a result. This is a way that we can love our neighbor through the way that we invest.
This is investing that makes the world rejoice.